It is Friday, December the 15th. And, I missed a show. Unfortunately, I was traveling on earlier this week and missed a show. And when I don't show up, the Fed goes crazy.
It really does. It delivered a Christmas present this week, and the market has been exuberant about it. Jerome Powell came out and put a 3-letter, tiny little word in a sentence, and they went bonkers.
And what was that word?
Any.
Any.
We don't think there will be any more rate increases. Any. Can you get it? Any. Yeah. So the market's gone bonkers.
And then you stack on top of that you've got 3 possible rate cuts in 2024, beginning as early as March. And the other word that he didn't say is giddy, because it made everybody giddy.
Yeah. Now, what's interesting about that, and interesting in his talk, if you read through it, he went on to say, past the any word, that he is going to get down to 2%. I mean, and so there is going to be that. It is going to be potentially a pause longer than some might think. So it might not be as quick a decline in rates.
And he used those 2 words he always uses, data dependent.
Data dependent. And he said that we even might be in a recession now, or there could be a recession.
I can tell you we're in a recession.
Yeah, so there it was a package that had tiny little stink bombs in it, but it was so wonderful that the market has looked through it, and it just believes
we're headed towards our 7th positive week in a row.
All right. So with that, we have already met as a group, and we're having conversations. And as we have told you over the last 6 months, we have our list. We're ready to go. We're giving a conversation and talking about our what we want to do, and we're having meetings the next week. I think you would know that we are going to lengthen the duration in the bond.
And we've already started that process, moving from, for the most part, 3-month Treasury bills to 6-month Treasury bills to widen the duration a little bit. But I think you'll start to see us even expand that a little bit more in the bond areas, looking at durations of at least 1 year or maybe even a little greater than that.
We will be looking at equity weightings with the ultimate thought process of where do we want on average, everybody is individual, but on average, where that average weighting will be by the end of the year. And we'll have a percent.
And when you say end of the year, you mean the end of
2024. And we will begin to move that process. We would tell you this: technology will be a part of a portfolio. We'll determine the correct weighting that we feel comfortable with from a risk standpoint.
Yep, and we'll look at financials really hard. If you're going to have rates being reduced, that's going to be a net positive for the big banks, especially. So we'll pay some attention to that, especially in light of the pounding that those types of stocks have taken over the last 12 to 18 months.
Industrials will be a consideration that we'll walk around, along with the area of consumer staples, things that we will continue to buy regardless, and things that typically historically provide a dividend position.
And the geopolitical issues are not getting any better. So you again, defense contractors would be. We've liked them over the last year and a half, and we still like them. So we will continue to look at that as a possible area to add to.
And then a new area that we're walking around having discussion on, and we'll contemplate, is in the small cap area, the small company areas of growth opportunities if the market does in fact lift off, have the soft landing, and then begin to lift off. So It was a good conversation from the standpoint of the market of Jerome Powell this week, and I believe it's fair to say he kicked off the Christmas
He
rally.
did. Oh, ho, ho.
Yeah, so there you go. So the machines are and the wheels are turning. The conversation's going on. Action is going to be forthcoming. Call us if you have any questions. Call us if you'd like to meet. We'll always be available to you. We want to wish you a Merry Christmas, Happy Holidays, Happy Hanukkah, but we do this each and every week because it is your money.
And your money matters. Merry Christmas,
Merry Christmas
to all.
Enjoy the weekend.